Gold prices are on a collision course with history. Andrew Maguire, an insider in the precious metals world, is making a bold prediction. $8,000 gold is no longer just a possibility. By the end of 2026, it could be the floor. But here's the catch. This surge isn't just driven by geopolitical tensions or inflation fears. It's much deeper than that. For the first time in decades, the physical market, gold you can hold in your hand, is shaking up the entire system. The old paper markets, they're struggling to keep up. And if the trend continues, it won't just be gold breaking records. Silver, often overshadowed by its shiny counterpart, is set for a massive leap. But what does this all mean for you? How does this affect the average investor, someone who doesn't trade billions or control massive vaults? Stay tuned. The path ahead isn't just about numbers, it's about understanding a seismic shift in the way markets are moving. Let's dive deeper into why 2026 could be the year everything changes. As we kick off 2026, something is shifting beneath the surface of the precious metals market. We've seen it before, the speculative swings, the volatility, but this time there's a bigger game at play. It's not just about gold and silver prices going up and down. The physical market, the gold you can touch, is starting to dictate the terms, and that's causing a massive disconnect with the paper markets, the so-called casino markets that many people rely on to set the price. You see, when paper gold starts trading above physical gold, it signals something huge. The typical system can't balance supply and demand anymore. Gold and silver aren't just commodities anymore. They're the cornerstone of a global power struggle. And here's the question. If this keeps going, what happens to the price when the supply just can't meet the demand? If you're just looking at the headlines, you're missing the bigger picture. Sure, the markets might look stable on the surface, but that stability is built on sand. The real story is what's happening behind the scenes, and it's about to shake the foundation of how precious metals are priced. Get ready, because the market you thought you knew, it's about to get a whole lot more unpredictable. The truth is, the physical gold market is now driving the entire conversation, and it's not just a short-term blip. Andrew Maguire's bold forecast of $8,000 gold, it's not pulled out of thin air. It's backed by undeniable trends. Here's the first piece of hard evidence. In late 2025, despite the best efforts of speculators trying to push prices lower, gold kept rising. Why? Because the physical market simply wouldn't let go. Maguire highlights a critical detail, the Fed's gold lease borrowings. These aren't just paper transactions. They involve actual gold, and the Fed had to pay back borrowed gold at higher and higher prices every month in 2025. They couldn't avoid it. And as the physical market tightened, the price kept climbing despite the odds. Now, here's where it gets interesting. This is only the beginning. The price action in 2026 is about to surge even higher, and it's not a coincidence. The paper markets, those futures contracts you see flashing across the screens, are struggling to match the real-world demand, and the consequences, a massive upward push on both gold and silver as physical buyers scoop up every ounce they can find. But notice what's missing. The major players in the paper markets aren't acknowledging the power of the physical market. They're still betting on the old system, but that system is about to break. And when it does, gold could be priced at levels no one saw coming. Why? Now let's look at how this situation escalates. The gold market isn't just having a moment, it's entering an entirely new phase. Think back to previous market crashes or surges. What did we see? A few lucky speculators cashing in. But this time it's different. The system that's held up prices for decades is starting to break down. Remember when gold hit $2,300 at the end of 2025? That wasn't a random spike. It was the culmination of years of manipulation, market forces trying to suppress the price. And yet, even with all their efforts, the price of gold kept pushing higher. Why? Because it was the physical market, not the paper traders, that was calling the shots. This trend is no longer just a few isolated spikes. It's a pattern that is growing stronger, driven by a fundamental shift in how gold and silver are being bought and sold. Central banks and large institutions are now quietly moving more money into physical gold than ever before. And as this shift continues, we're seeing something happen that most people haven't fully grasped. The paper markets are no longer in control. The physical market has taken over, but here's the part nobody is saying out loud. As the paper market starts to lose its grip, we're going to see prices skyrocket. And when they do, they're not going to stop. The next price target, $8,000 gold and $140 silver. This isn't a prediction. It's a likely scenario based on real-time market movements. Now watch how fast this escalates. As more institutional players make the shift from paper to physical, the supply will be gone in the blink of an eye. We're talking about a gold rush, but not in the way you think. It's happening right now, and it's forcing prices to rise at an unprecedented rate. Now let's stack the pressure. First, we have the unstoppable rise in physical demand, but here's where it really starts to build. Over the past year, we've seen some startling developments. Multiple global events are converging, making the situation even more volatile, and it's happening fast. Think about it. The number of contracts being sold and the sheer scale of forced selling in the futures markets are creating an environment where the paper market is simply unable to keep up. And that's not all. The real danger here is the loss of control. The people who used to run the show, those who controlled the gold and silver futures, are scrambling, and for good reason. Their old methods are no longer working. We're talking about major players, including the biggest banks, having to sell billions of dollars in positions just to stay afloat. This is not a typical correction. It's a full-scale crisis that could spill over into a massive disruption. But here's the kicker. As this panic sets in, the price of gold and silver will be driven up even higher. Every forced sale, every bit of selling pressure will only trigger more buying. And the buyers, they're the ones with the deep pockets, the institutions that see the writing on the wall. Now, what happens if this continues? The cycle becomes a self-perpetuating beast, forced selling, followed by desperate buying, followed by even higher prices. This is the beginning of a chain reaction that could send gold and silver prices into uncharted territory. Now, let's step back for a moment and think about the bigger picture. This isn't just about numbers or charts, it's about real people, you, me, the average investor who's trying to navigate a market that's becoming increasingly unpredictable. The kind of market where those who are first to understand the true dynamics can profit, while others are left behind. If this gold and silver rally continues, it won't just be institutional players who are making gains, it'll be everyday investors too. But the reality is, most people still don't understand how this shift is happening. They're still relying on outdated systems, thinking that paper markets will control the price of real-world gold and silver. But here's what's different. Those who are starting to move now, who are beginning to convert their paper positions into physical gold and silver, will have a massive advantage. You've probably heard the whispers. People are already talking about this in the investment community. The question is, are you ready to act before it's too late? This is where you, as an investor, need to pay attention. It's no longer about riding the ups and downs of speculative bubbles. This is about positioning yourself in a market that's about to shift fundamentally. If this feels familiar, say so in the comments, because we're at the edge of something huge, and if you're not paying attention, you could miss out. But let's not get lost in the chaos of the moment. Let's take a step back and look at what's really driving this. It's not just a case of investors reacting to the latest news or headlines. What we're seeing is a deep structural shift in the market itself, a shift that's been brewing for years. The old system of paper gold and futures contracts, it's breaking apart, and the physical market is stepping in to fill the void. This shift didn't happen overnight. It's been building step by step with central banks and institutional investors gradually moving their positions into physical gold and silver. But what's really driving it is fear. The fear that the old system can't protect them anymore. As global debt levels rise and currencies lose value, these institutions are realizing that the only safe haven left is physical assets. Here's the unsettling part. The more the physical market takes control, the more it exposes the vulnerabilities in the paper markets. We've already seen how this shift is forcing the hand of major players, pushing them to buy back gold at higher prices. And with every price rise, the gap between the paper market and the physical market widens. The reality is this gap isn't going to close, it's going to grow, and it's going to drive prices up even further. So, why is this happening now? The simple answer, leverage. These institutions are leveraging their massive portfolios to secure physical gold and silver because they know it's the only thing that will hold its value when everything else begins to unravel. And as they move, the price moves with them. This is the mechanism that's driving the prices higher, and it's something the average investor still doesn't fully grasp. Now let's fast forward and look at what's coming next. We're at a crossroads and there are two clear paths ahead. One path leads to a continuation of the current trends. Physical gold and silver prices continue to rise as more institutions pile in, driven by the need for safety and stability. This is the optimistic scenario where the market reacts to increasing global instability, pushing gold and silver higher than most experts predict. But then there's the other path, the riskier one. What happens if the old paper system somehow manages to hold on for a bit longer? If the paper markets manage to find a way to stabilize, even temporarily? In this case, we could see a bit of a lull before the next major wave hits, but that's only a temporary reprieve. The fundamental shift we're seeing now, it's unstoppable. What's clear is that the momentum behind this change is building. The next move is already forming. The question isn't if gold and silver prices will continue to rise, it's how fast and how far. And no one can predict exactly when the tipping point will come, but what's certain is that when it does, there will be no turning back. So where does that leave us? What's the final takeaway from all of this? The market is shifting right under our noses, and the opportunity to profit from this change is now. The system that's kept gold and silver prices in check for decades is breaking down, and in its place, a new system is rising, one that's far more unpredictable, but one that offers massive potential for those who can understand it. We've covered a lot today, but here's the one key insight. The future of gold and silver isn't about short-term volatility or speculative bubbles. It's about long-term fundamentals, physical supply and demand that are driving prices higher. And as the physical market continues to take over, expect the unexpected. The price of gold could hit $8,000 by the end of 2026, and that's just the beginning. Now, here's the big question for you. How much physical gold and silver do you own right now? If you don't have exposure to these markets, you're sitting on the sidelines during one of the most significant financial shifts in modern history. For more analysis like this, make sure you're subscribed and hit that notification bell so you don't miss our next deep dive into the world of precious metals. This is just the start. Stay tuned for more insights you won't hear anywhere else. And until next time, remember, buy physical and make sure it's backed 1-to-1.